Joining me now is Eric Sheridan, Goldman Sachs, co-lead of the TMT group. Eric, I'm struck by the fact that initially we weren't expecting much on guidance this quarter, but expectations as things came in strong seem to have shifted because lately a lot of companies are getting punished for cautious guides. What's your take?
Yeah, I think we've been on quite a journey with corporate earnings going back to mid-April where there were very, very low expectations. And frankly, through the end of April and in the beginning part of May, better than feared was a term we used a lot to describe the reactions that were generally positive to earnings. Expectations have reset higher over the last couple of weeks broadly for the tech landscape. So the hurdles are higher. The need to meet or exceed guidance has probably moved up from where we were from an investor sentiment standpoint in mid-April, but the overall environment is generally stable. Especially at the high end for the digital consumer, the AI trade continues with CapEx continuing to be a strong driver of deployment, and we're starting to see the beginning of broader deployment of consumer AI, and that was very much a theme on display last week around Alphabet's Google I/O event and continued innovation out of a lot of the private companies in the sector as well.
So given what we're seeing in some of these arguably cautious guides and what's this week become known as the taco trade, Trump always chickens out, the idea that maybe things aren't going to be as bad as they initially seem. Are some of these moves on cautious guides or disappointing guides, if they turn out to be more than cautious, are they buying opportunities?
Typically, they are, as long as visibility can improve. I mean, the tariff dynamic, which in my sector typically impacts around e-commerce and advertising, still remains in a relatively low visibility landscape. I mean, there's been a lot of moving parts globally. There's been different and shifting thematic elements coming out of the administration and reciprocal tariffs from other parties globally. So I still think investors have low visibility into what the June quarter looks like, but then more importantly, what the second half of the year looks like. So any cautiousness is met with selling, mostly because of that visibility dynamic pervading across almost every investor conversation I have. But as we get month to month to month, visibility improves. We generally are seeing those as buying opportunities.
Does the reaction to Dell suggest that the AI trade still has legs?
Well, I don't cover Dell, but I will say this. The AI CapEx theme continues to pervade. So if you go look at across the largest companies, Amazon reiterated their CapEx guidance. Alphabet reiterated these were very high growth rates that the market had to absorb in the front half of this year. And Meta actually raised their CapEx guidance for 2025. So the build out of AI continues. I would not count on a slowdown in that looking out through the remainder of this year at a minimum.
How are you framing which layer of the stack most likely stands to benefit next?
We are definitely moving from the infrastructure layer to more proving out the platform and application layer. John, you've been nice enough to have me on, and we've talked about this before. Every computing cycle that I've ever lived through eventually moves from the infrastructure layer towards platforms and applications. So you have to, in the mobile computing cycle, you had to build out spectrum and networks, and then you eventually build out the app stores by Apple and Google, and then eventually you built out the Airbnbs and the Ubers of this world. We are still on a journey similar to that with AI, and I think we've seen a lot of innovation in the last 10 days alone on where Google wants to take Gemini, where OpenAI wants to take ChatGPT, where Anthropic wants to take Claude. There's still a lot of innovation on the application layer that's ahead of us with respect to AI, and it's going to drive a lot of utility-like behavior.